Welcome to Fintech Frontiers, the podcast that explores the latest innovations and trends shaping the fintech industry. I'm your host, Stephen Walsh, CEO of Keeper Solutions. Today, I'm delighted to welcome Simon Bentholm, co-founder of DreamPlan, a company on a mission to democratize financial advice. Simon, it's great to have you on the show.
Thank you for having me, Stephen, and well done on the pronunciation of the very Danish surname.
Thank you. Simon, you mentioned that you and your co-founder saw a big problem in the financial advisory market, that access to quality advice has plummeted for everyday retail customers, even as their wealth and the complexity of financial products has increased. Could you tell me a bit about that problem and what led you to go and solve it?
Yes, I still think we're trying to solve it. I don't know if you fixed it for everyone yet, but in the last 20 or so years, the access to advice within the European Union, back then also with the UK, of course, has actually reduced by 65%. I think most people find it really hard to get a hold of an advisor within their financial sector.
Yes.
And of course, there is advice to be gained if you're within the wealthy segment, but for what the banks are calling retail customers, it's really, really hard to actually get the advice. And at the same time, like, their wealth has grown, the regulatory complexity from the legislation have grown, and the product complexity within the financial sector has grown as well. So it's like everything falls into one big market opportunity to us, basically.
Right. And why is it that, as wealth has grown, and why is it that it's becoming increasingly more difficult to get that advice?
So it has, I would assume now you're actually asking me to put myself inside the heads of the last 20 years of CEOs in the financial sector, right? But I'm guessing.
Go for it.
So I'm guessing that due to the fact that having a lot of legacy systems, they haven't been actually, fast enough of optimizing the advisory session in itself, which
Yes.
actually means that, for instance, in the Nordics, it is more or less the cost on the customer self to actually discover whether or not there is a refinancing opportunity within your mortgage. It's very different in the UK and things like that. In the Nordics, they need to discover it themselves, where you would think that, well, that's just a basic calculation. The banks should be able to do that, the ones distributing the mortgages in the Nordic sector, and then push to those customers who actually gains money by refinancing, right? They should be able to do that, but they're running on legacy systems, right? Which actually means that the advisors need to do possibly 10 advisory meetings before selling one refinancing of a mortgage, just an example. Which makes it, of course, non-feasible because man hours is very, very expensive. And then, of course, there's the part that if you really want to do a payout to your shareholders, you need to slash prices somewhere or cost somewhere. And that might be the access to advisory, because it's really, really hard or really expensive to keep running, and they have not been able to sustain it. The funny part about this is there's a long-term consequences for the banks as well, as in when you're looking at what we call the long money products, so that being mortgages, pensions, investments, and things like that, stuff that is not everyday transactional. The advisories in most of these markets, so the advisors, is actually the only way that the financial institutions can distribute these products. So they are basically sitting on a branch that they are trying to, cut down at the same time. That's and I assume at some point they will notice that is what happening.
Really? Wow. Well, and that's a tricky place to be. So tell me, so it's this increasing wealth, this increasing complexity, and then the lack of advice. Maybe the high end of the market might be well served, but the middle end of it underserved, and the financial institutions, you're saying, hamstrung by siloed legacy platforms. Where so you've seen there's some pent up demand for advice in the market, you've seen an opportunity to
Exactly.
address that. I
Yeah,
guess.
so both of actually. So we are both focused around actually doing the digital automated advice where we're doing recalculations on people's entire portfolio of long money products and things like that on an automation based. But then also actually because we build all of our software as a no code, the financial institutions, of course, have grown an interest in a platform and using that. So we're also doing a B2B as well, actually supporting the financial institutions to get in front of their customers, get without actually using their. So we all know what happens if somebody in the business side of a financial institution is saying like, I have this great idea, and they do a project and they scope it and everything like that, and then it ends up in the prioritization line in IT, and they say, well, you'll get it by 2032, right? So actually having our no code software and they can release on everyday basis and things like that whenever they see new market potentials without actually disturbing IT too much is a very great value proposition for our customers as well.
Great. So let me just drill into this a little bit here. So you're saying that it's no code, and is that from the bank's perspective that they're able to access this? But is it not? Is it not delivered into the banks via an API?
No, so basically, I don't want to go too technical here.
Well, people might be listening to this, but yeah, as you say, let's keep it at a high level.
So basically, they can actually install our software on the inside, and then they can basically spew out as many different solutions they would want to for their advisors to be more optimized in their sessions, for doing recalculations on their customers so they can be proactive on the customers and all sorts of stuff. So basically every sort of interaction you can imagine with a customer that also requires access to calculation, access to various endpoints, taxations, pension schemes, and things like that. So all of these integrations is actually built into it. So you could imagine a business person having an idea inside a bank. I want to have all my advisors check if anybody have a what we call a passive pension, a pension they're not paying into, which is typically fairly expensive to have, right? I want all my advisors to check that when they have an advisory session beforehand so they can handle it within the meeting. And it would take this guy, without having any sort of coding competencies, it would take him an hour to actually do the solution. And then
Great.
it's done and ready and running.
So is your platform leveraging kind of PSD2 and open banking? How are you getting that information out?
Now you're getting into the rabbit hole, but sorry about that.
Yes.
Everything around open banking, open finance, which is the new thing, right? Um, well, basically, I love that. The whole idea started 25 years ago, I think, like something like that, when the European Union actually figured out that, holy Christ, the financial sector is the only one that doesn't have any market forces, right? They're using all their innovation. All the cost in innovation was going towards the capital market instead of the customers, because there was no point in actually being just a bit better than that bank, because nobody actually moved and things like that.
No
So
churn. Too difficult.
exactly. So the PSD1, the PSD2, brilliant pieces of legislation, if you ask me. The new one coming up, the FIDA, however it's going to look, but on what we have seen up until now, is just carrying on that insanely great vision.
Yeah. Widening it out from payments to all other.
Yeah, and what you see, we haven't had much innovation based on the PSD2. We haven't had many new businesses rising, big businesses rises on that. There has been small ones, but not anything big. But if you look at your mobile bank app today, you will see that anything that basically is in there is PSD2 data, right? So banks has actually been moving on the data that they all of a sudden was forced to give access to, right? And
So are you saying, Simon, that the banks have been kind of turning PSD2 on themselves to break down the siloed barriers within the banks to get that data out?
I don't know how that would assume that they're talking together within the branch. I don't think so. No, but what I do think has happened is that some innovation people somewhere, some technicians somewhere, it's all of a sudden seen like, all right, somebody forced us to expose those data, and now we can actually work with them. So 6 months ago, if we came and said, well, we want to look at transactional data and categorize them, IT would have said, no way we're ever getting to that point. And that has happened. Right? And now, so from our perspective, this is still small rollout. The PSD2 is a very little thing if you look at it in the big perspective of retail banking customers. So now the next what do you want to call it, generation of legislation coming up now is focused around what we call long money products. It's focused around mortgages. It's focused around big loans. It's focused around
Life.
pensions, life insurance, damage insurance as well, and things like that, which is actually where the money is for retail bankers. It is not in transactional states, right?
When you say the money, you mean that there's money at rest which can be used to fund other products within the bank?
Yeah, within the bank. But the thing is, like, there's a perfect business case. So when somebody is advised on using their long money, I will try to break this down in a second. I'm just going to say the generic thing first, and then I'll do an example, right? So if somebody is advised on using their long money products in the right way, meaning the right way, actually, they have different tax regimes, right? And they work on interest rates on different timescales, right? So that's of course rearranging money, basically. um, but what you as a retail banker are making in that perspective is insanely a lot of money. So our average customer at our B2C business is gaining 1.1 Danish million kroners. That's around 180,000 euros in a lifespan without any cost. It's just free money.
Right. Who's gaining that?
That's
That's the customers are gaining that over their lifetime.
the average. That's the average. There are literally ordinary retail banking customers who are gaining 1 million euros in their life, where we are just rearranging money. The cost monthly is zero, right?
Right.
Yeah, I will
Yeah.
explain in a second. But the thing is, like, the financial sector is actually also making money.
Of course, I'm sure they are. Yes. I was going to ask you how much.
You have a much higher churn on their products, right? So we literally have the case that by removing the access to the advisory, the retail bankers are getting less money and the banks are earning less money. So by fixing this problem, everybody wins.
Win-wins. We like
Yeah,
them.
exactly.
Yeah.
And what happens in many cases is, of course, that people are looking at their mortgages. And mortgages, there you have a mental model of a mortgage being a loan, right? And what do you do with loan? We've all been taught this from our parents. Well, let's just pay it off as quick as possible, right? We know that. But at the same time, in most markets, currently actually as well, in the EU, this is the cheapest money you can get. So the loans on your mortgages is the cheapest money you can get.
It is.
And you're using extremely taxed money to pay them off. While a lot of Europeans are either behind on their pension, which in many countries you also have a pension scheme where you're actually you're not taxed on them until you take them out, right? So
Correct.
that meets full yield on interest rate for the next 30 years for a lot of people.
Yeah. So you can pay your pension from your gross income, where you have to pay your mortgage from your taxed income. So it's
Exactly.
very expensive.
And then if you
There's an opportunity
rebalance,
there then.
yeah, if you rebalance, like keep the same risk level, but you calculate, all right, so what I'm doing is I expect to be sitting in my house for the next 30 years and I want the same risk balance between my products and things like that. Then you're saying, like, all right, so maybe you don't pay it off that fast. Maybe you're actually better off by having still 20% debt when you hit those in 30 years, because you have used very taxed money to pay.
Is that the core? Is that the core value proposition that you can help users
No, that's one
to
of
act?
them.
One
So
of them. Can you tell me what is your unique value proposition in the marketplace, and can you distill to me what that key value that you're creating? Is it more efficient use of long-term money, and helping consumers to take wise decisions around that?
yeah, exactly. So basically, it's actually doing the advisory without the advisor, right?
Yeah. Is that are we talking robo advisors? So
It's a big difference. Now we're heading on to machine learning and AI and things like that, because of course, we are licensed by the FCA, and there we cannot use AI, right?
so you're licensed, you've got a money license with the FCA in the UK?
No, in Denmark.
In Denmark, yeah. Very good.
Yeah, and that's an advisory license,
Yes.
right? Yeah. So that is to actually sorry.
Are we into the difference between advice and guidance now? Because I know that's a very sensitive topic, and I think that there's a working group in the FCA in the UK to help get better definition as to what the difference between the two is. Is that an issue or concern for you?
Yes, but from more perspective than all right. So basically, how the legislation is looking right now, and I understand. So the British FCA is really, really good at being on the forefront of these things.
They are.
I've worked with them back in the days.
Yeah, they're really leaning in.
Yeah, exactly. But as it looks in the European Union, so as long as somebody is saying you should spend less on mortgage monthly, more on pensions, or you should invest some of those money, that is basically coaching, what they call coaching or guidance.
Yes.
And I always say, well, test if this is what your uncle would say to you at the family parties, right? And then it's that. If you go in and say, like, right, so doing less on that mortgage actually means that instead of having 20 years left on the mortgage, maybe make it 30 again, right? Or something like that.
Yeah. So that's you're talking about a specific action on a particular product relating to a specific customer, which will
Soon
have
as,
financial implications rather than a general coaching.
yeah. So as soon as you're going into to saying that means this product, then you're doing advice, right?
Right.
Yeah.
And
And
okay. And can I segue from that, Simon, into AI and machine learning? Because I think we're touching on that. You've spoken about the lack of advice in that middle market, and how you're going to try and bring that there. So is it fair to segue you into talking about how you're delivering that, and what role AI is playing in that?
we can do that. That is completely fair.
Let's go for it.
Okay. So whenever we do calculations, basically, Stephen, you walk in to one of our solutions or a bank that is running one of our solutions. Whenever we do calculations saying we are projecting that your house will be like this in 2072 and your pension will be like this, and if you don't change anything and blah, 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 then we are doing ordinary multi-dimensional regressional analysis, because everything has to be transparent inside this box.
Yep.
So the FCAs basically need to be able to come to our door, knock on it, and open it and see what exactly happened from A to B, right?
No black boxes there.
Black boxes
Are we touching on explainability here?
for the end customer.
Well, I suppose you're talking about the regulator wanting to see how did you get that projection?
Exactly. Yes. Yeah. Exactly. So they need to be able to actually see the algorithm that brings us from A to B, or brings the customer from A to B, and what have we advised them on, right? Um, But of course, there is funny things to be done in AI, and we have been training on training data, and saw the outputs of an AI that were really staggering. We can just not put it into production.
Right.
What we are constantly doing is actually trying to keep a dialogue with the FCA and say, like, come play with us, basically.
Yeah.
At some point in the future, you need to actually be able to have an opinion on this. Please
Yes.
view us as your playground. We have some data, we have some models, we have been running it. You can see how it works. I know it's a black box. It's not something we put into production. You're not going to see it in the market, but it can do stuff.
Yes.
But then you have on the other side of that, when we implement within the financial sector, so within a bank, within a pension company, within a mortgage company or an insurance company, then we're using a lot of AIs to actually create the front ends, to create the customer journeys that need to be,
Right. Okay.
to actually ensure that when you make some sort of flow where you're collecting some data and end out in some really nice graphs that everybody can understand and things like that, there's an AI running below. If you, as a creator of that flow, are missing a data point somewhere, I said, like, I cannot create this graph because I'm missing a data point, and it's this data point. Should I create it for you? That is within a no-code tool as well. So
That sounds like it's a kind of an LLM type of capability then, where it's got a little bit of, say, common sense, and is saying, well, we've got this much, so do you want me to do this, rather than saying, sorry, the computer can't.
yeah,
You can
exactly.
you can kind of do what you can with what you got.
Yes.
Cool. Cool. But I'm also hearing, though, that you've seen some incredible innovations that you can deliver with AI, but because it might be difficult to explain how the algorithm works to the FCA, that you're not in a position to unleash those innovations into your product until the FCA gets on board. Is that correct?
I think you're framing it a bit too far now. I'm not that radical.
Okay, so
So,
I don't want to get you in
um,
trouble now.
no. I've seen really great results on it. However, we are hitting ordinary human beings' life. This is their livelihood. This is their foundation.
It's their retirement even.
You better be right.
Yeah.
It's not at a stage. Our training lab is not at the stage where I would release it in any way now.
Okay. Got
And I've seen good results. It's just I haven't tested on enough.
you. Yeah.
And I also was so the old days of looking at an industry battling the financial conduct agency is basically gone, right?
Yeah. Boxes. There's engagement. There. There's co-innovation. It's
Exactly.
yeah.
I wouldn't do it if the FCA was not comfortable with it. So this is a process for all of us. I'm not expecting us to launch an AI robo advisor thing within the European Union the next coming years unless the FCA actually move really fast on this. And of course I would like to, because I can see that we are really ahead of the game. One of the ways I'm getting to that point is actually constantly inviting the FCAs to come play with us, basically, right? Because this is normally not things they have access to do, so that they can get comfortable in it. And then we can together try to figure out, all right, so what can it be used for? Where should we definitely not use it for it?
Yeah.
And things like that. So
Yeah.
I do see us being in a position where as soon as you're licensed in some way, you are one of the actors in this ecosystem that is where we have to, every one of us has to accept we are in a process right now, because AI is fairly new. It's really hard to actually legislate around it because most people don't know anything about it, right? So let's join forces and actually get somewhere and see where it can bring us. But it's not like I'm saying now we're going full throttle on this, because it's my mom and dad's pension savings, as you're saying.
So crawl, then walk, then
Exactly.
jog, then run. Cool. Okay. And would you be able to give me a sense of where DreamPlan is in its scaling journey today?
Yes. So we have just raised a fairly big, what do you want? Either it's a big seed or small Series A. That's
Well done.
that's some sort of in between there. After been running positive numbers for a year, because we basically had no time to scale. That's what happens,
Yeah.
right? Yeah. Our investors looking at us and saying like, "Why are you making money? This was not the plan."
I think investors like that kind of stuff.
Not when you're in a scale scenario, right? Yeah. So we well, a year ago we were basically 7 people. Now we are 30, and I assume we are gonna be around, I don't know, 50 in a couple of years. But as I always say, if we need to stack up too much on manpower, we actually built the product wrong, right?
Yeah, this is it. Yeah. You should get to a critical point where you can separate the growth in the size of the organization from the scale out in the market.
And also because we're now seeing a fairly big uptake through the financial institutions when they are licensing our software, right? Then we are basically seeing us hitting way more retail customers than if we were to do it ourselves, right? So we're getting way closer to our actually vision in this market. I don't know, we have processed 1.3 million Danish social security numbers, and I think we are 6 million people, right?
Wow,
Yeah,
that's fantastic. So the B2B to C channel is doing the heavy lifting for you, I'm hearing. Is that right? Yeah. Yeah.
exactly.
Well, that's fantastic. And it's not an easy journey to navigate because it can be difficult to get the right engagement with these large institutions. But it sounds to me you have navigated it and you're getting huge traction in the market. So hats off and kudos. That's
Thank you.
brilliant.
Thank you. Thank you.
Well done. Well, it's great to see it because, I know some fintechs have put huge effort into the B2B when the B is a bank,
Mhm.
and it may have taken a long time, and it might have ended up in a proof of concept. But what you've delivered is 1.3 users in scope. So I mean that's phenomenal. So I think it's good to call that out as a
That's
success.
a long way to 6 million people. So
Yeah,
let's not celebrate yet. We're very Danish that way.
yeah, fair enough. We won't take out the herring quite yet.
No, no, no.
Fair enough. Okay, cool. Great. So let me push on a little bit. So just then maybe looking ahead. So I think you've been hitting a lot of milestones and it sounds like you've been maybe exceeding the expectations of your investors, which is very impressive in such a short time scale. You must have overcome a lot of challenges to get to where you are. What do you see as happening in the next, say, 12 months or first, and then I'll ask you about the longer term vista.
I think we'll just do I, well, my
Do what you're
let's say
doing.
the engineering team hate it when I say just. Um, we'll do as what we have done the last year or so. Just ramping that up to the point where we cannot sustain it with the amount of people we are right now. And then we'll start looking at new markets. We're of course already doing that. The Nordics is opening up. Germany is opening up,
Yes.
but more from right now we're doing it from a more of a opportunistic perspective. So people are reaching out to us, and they're really like, "Yeah, we can
Right.
do Norway, we can do Germany, but maybe we should also start at some point being strategic about it." That's a constant discussion we're having in the board. And then we go back to every day and just work our butts.
Super. Super. I'm guessing maybe that some of your clients have probably got a presence in more than one country in the Nordic region as well, so that the success can breed success. And
Exactly.
super. It's great. And then where do you see this going in the longer vista, say 5 years?
So what I would love to do is actually gain pan-European or EU. So we're based upon the fact that at some point the open finance legislation or the PSD3 or whatever you want to call it kicks through, right? And this is our game when that happens.
Yes.
Because then we have the access to all of those data within the financial institutions.
And that's coming down the tracks.
Yeah, exactly. And we are fairly good at calculating with it. And I don't see many fintechs in this space that are really good at calculating across big asset classes like mortgages, housing values, and pensions and investments, and actually do taxations on the in the other direction, right?
So you've got a little bit of white space in there, obviously, that you're occupying.
Exactly. But I would assume, so my perspective is that as soon as we see the open finance legislation being more set in stone, I would assume I would get around 400 competitors in a night because it is a big hole in the market. And we are talking hundreds of millions of Europeans being directly underserved, right? It is
Yeah.
a great hole in the market.
Yeah. Well, it's exciting, isn't it, when regulation opens markets rather than cuts down on innovation. And I think that the pendulum in the European Commission is swinging away from over regulation now, but that there is a desire to give certainty and to open
Yeah.
the door for
In
innovation.
all fairness, this all stems from 25 years ago. It's not something new. So the basic notion that the financial markets are, in terms of individuals, are closed in is coming from the market, not from the legislation. So now they're using the legislation to actually, crack open the market, and it's really interesting. And all hats off to the legislators, hats off to the financial institutions, and so they are running really, really tight businesses on maintaining and holding insanely societal critical products, right?
Yeah.
Their game has just not been innovating the customer facing parts of this. And maybe somebody else should do it.
Maybe they should. Now, before I wrap up, Simon, would you be able to just quickly maybe share some valuable insights that you've learned that might be useful to other fintech founders who are thinking of going that, they may have a B2C offering, but they may see the B2B to C as being important. Any wisdom you could share there?
I'm not sure I have any wisdom on this, I'm not sure it's generic. What has been working for us has actually been great partnerships, very transparent as well. It was actually one of our partners, one of our pension companies, that actually came up with the idea of them licensing our software. So doing B2B was a pull, basically, right?
Well, yeah, they could
Yeah.
they could see an opportunity. That's great.
And
So is it to co-innovate with the banks, and actually they might be able to lead you by understanding their psychology of what will work for them and listening hard, that you can get your solution into a shape they can scale quickly. Or am I putting words in your mouth there?
a bit, because we are also so you're in a state where a certain financial institution have a uh, they have they have an operation running. They all of them have Most of them have great businesses, right? And then I have what I envisioned together with my co-founder to do, which is out here, right? I mean, out of the screen, right? But what one of our partners saw was like, all right, so if I use it to here, I am moving my operations a bit. I'm not going all the way where Simon and Stine wants to go. Uh, I can see that the software can take us there when we are ready in 7 years or whenever they're going to be ready. But
Yes.
so translation into the financial institutions, I think actually it was what you call zone of proximal development, right? Not
So
giant leaps.
development, right?
Yeah.
Yeah.
Yeah, and that works, and we were lucky to have good partners that saw that for us, and now we're of course helping the financial sector to see this. So we're partnering up with them and saying like, all right, so what if we can provide your advisors with this? Then you would be more efficient. What if you could do like this? Your KYC just runs, and while you're doing a verification on people, shouldn't you actually get the e-taxation verification as well, instead of something that runs out within a second, and things like that, right? All of sorts, but we might, from a technical perspective, be thinking way more ahead than they are, because they are thinking about the operations, and you need to just take the operations one step instead of your big dream of where
Yes.
you are in 20 years, basically, right?
So just to help them put one foot in front of another and to be able to do that faster than they could do it internally themselves. Yeah,
Exactly.
great. Super. Well, Simon, it's really been a fascinating discussion. Thanks very much for sharing your expertise and really giving insights into what's been a very exciting journey for you so far. And I'm sure the listeners will have a much better understanding of the problems that you're solving. So thanks so much. I really enjoyed speaking with you.
Thanks for having me.
Pleasure.